Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing SkyWest stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, $3 billion market cap. They're trading at $74 a share, and they have 40 million shares outstanding. SkyWest is a regional airline. They also lease jets and spare engines to third parties. They're an on-demand charter and have ground handling services. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had 150 million of free cash flow in 21, then a negative in 22, but they rebounded in 23, 420 million, up even more to almost 500 million in the trailing 12 months. Really good margins, 14 and 15% free cash flow margin. Net income is the profit or loss on the income statements, revenue minus expenses. And that is positive every single year, highest in the trailing 12 months at 177 million. Revenue is the sales for the company, and that doesn't go up that much, only 2.7 billion up to 3.2 billion. The other airlines we looked at had a much more significant growth since 2021. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 8 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $7 billion. We divide that by 40 million shares. And we get a calculated stock price of 173. They're trading at 74, so they're trading at a 57% discount. It's a real strong buy according to the model. Do you think it's a buy or a sell? Let me know in the comments. Look at Simply Wall Street's valuation. They're at 276. They say they're 73% undervalued. Maybe I need to pick up this stock. 4 analysts priced this stock at 95. They also say it's undervalued, just not as much as me. There are 16 companies in the same industry as SkyWest, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend only 200 million in CapEx, a lot lower than the median average. Debt to equity ratio is pretty good at 1.3. For every dollar of equity, they have $1.30 of debt. They're one of the 3 companies in this industry that generates positive free cash flow. They rank 6th in market cap at 3 billion. Price to book is good at 1.3. The way you calculate price to book, it's stock price over book value per share or market cap over equity. They're trading at 17 times earnings, which is equal to the median. They have the best price to free cash flow, 6.2. Besides Fly Exclusive, they have the worst price to sales ratio, 0.9. But most industries have a price to sales above 1. This industry is notoriously low. They generate 3.2 billion of revenue, a lot less than JetBlue, and they're not growing much. Their 5-year annual revenue growth rate is only 1%. Here's their latest income statement. The second quarter of 2024, revenue up a lot, 867 million. Last year, 725 million. Most of their revenue is from flying agreements. That's 838 million. They also generate 29 million from leases and airport services. Salaries is their biggest expense, 355 million. Maintenance and repairs, 183 million. Depreciation and amortization, 100 million. Fuel, not too high, only 21 million. Because the companies that lease their aircraft pay for the fuel. So that's why their fuel is so low relative to others we looked at. Operating income, 119 million. It more than tripled from last year. They spent 29 million of interest on their debt. Pre-tax income 102 million, taxes 27 million. So net income went from 15 million to 75 million. EPS 35 cents last year, and now it's $1.88. And it looks like they're buying back a lot of stock. It was 44 million shares outstanding, now it's 40 million. So this looks like the best one yet. So to summarize, I have them trading at a 57% discount. Their ranking is 9 out of 10, but I don't buy airline stocks, so it's a 1 out of 10 would I buy. Ratio is amazing, 8 out of 10. A great price to free cash flow, a good PE. Financial, 7 out of 10. Even though their free cash flow is good, their revenue is not really growing that much, only up 18% since 2021. Free cash flow up 224% in the same time period. So that's the end of the video. Give it a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.